Hey, it's Dustin with the Davidson Group here at ReeceNichols. In this May 21st market update, we're going to be talking about some national statistics specifically around new construction and new construction starts. I want to jump right into the information, just give you some quick bullet points, something to think about, and think about this in the sense of, are we entering into a market crash, or is there going to be a market crash, or are we in the middle of a housing bubble? We've talked about that in the past, but I've got a little bit more data to back that up and see where we are in the market. So this quote is from a chief economist at Freddie Mac, and the quote says, "The main driver of the housing shortfall has been the long-term decline in the construction of single-family homes. That decline has resulted in the decrease in the supply of entry-level single-family homes, or starter homes is what he calls them." So what that means is that year over year, especially since the last housing crash, we have not had near the starts that we needed to keep up with the demand. And with the influx of the largest generation, the Millennial Group, entering into the housing market, some for the very first time, it's really causing that stress on the supply of what we're looking for. Single-family housing units completed by decade, you can see here that from 2010 to 2019, we have 6.5 million new starts when our average is closer to 10. You can see that from 2000 to 2009, which would have incorporated that, 12.6, but the other years, they're around that 10 million per decade, or 1 million per year. Google reported a few weeks ago that a search question of when is the housing market going to crash spiked 2,450% in the past month. That's 2,450%. So this is definitely a topic that's on people's minds. They're wondering what's going to happen. They can see that we're in a seller's market. They understand the inventory shortages, and they want to know that if there's going to be instability in the long term, that's going to cause the market to crash. Should they move now? Should they sell now? Should they wait to buy? Those are all questions that are on their mind. When you look at this year-over-year change in listings, you can see that we've had a 40% increase in new listings to the market. But what happened a year ago? Think about a year ago from now, or a year ago over the past month and a half, we were right in the middle of the beginning of the pandemic. We didn't know what was going to happen, and we had so many people pulling out of the market with the uncertainty and not understanding what was going to happen moving forward. In fact, here at the office, we weren't even open. We were working from home, and we could come in to do things that we had to do, but really, by and large, the entire country was at a standstill and not moving forward. Yes, there were some new homes, but that's why we see the increase of 40%. When you look at that other number, we're down 53% of actual total listings on the market from a year-over-year change. So even though we have more hitting the market than we did last year, that number of total listings is down tremendously at that 53%. You can see here this statistic, this chart shows just 2020 to 2021, and the inventory levels of those single-family homes were consistently increasing. It's just there's a big gap in that increase because we have so much less inventory. And I think that this statistic or this comment from National Association of Realtors really sums it up. It says, "Demand remains strong as home buyers are snatching listings quickly off of the MLS. It takes approximately 18 days for a home to go from listing to in a contract in this current housing market. A year ago, it took 29 days. So we're 11 days faster from a national standpoint on our listings that are on the market to under contract. That speaks volumes for the lack of availability or lack of inventory that we're seeing, and all of these things are pointing to the fact that we have a supply and demand issue, not a potential housing crisis on the horizon. So a question was asked, a survey of economists is, when will the U.S. housing inventory grow again? And 43% of those economists think that in the second half of 2021 is when we're going to see our strongest growth, meaning that in the next couple of months and then for the next several months through the end of the year, we're going to have our largest inventory gains, which means it will allow for the seller's market to become a little bit more of a normal market. Not that we're going to change over into a normal market, but that it'll subside a little bit, that we will have the opportunity then to place more buyers, so there's not quite as much demand out there, even though they think that through 2023, we're still going to see inventory homes, or the inventory continuing to grow. So that really kind of wraps up what I wanted to talk about. What do we need here? in the country. So we're looking at the United States as a whole. We're at an inventory shortage. We know that. We've got new construction, the starts that are not happening. That can be for a multitude of reasons, but we think that over the past decade, because we're looking at that decade's worth of data, not just over the past several months where material costs have gone up and it's more difficult for a builder to build now because of those costs that have risen. But when we're looking at that time frame, we can tell that those contractors have either left the marketplace and they're not there actually building the homes, or they're more hesitant to start the new construction without securing a buyer on the front end because they don't want to run into a situation where they're walking away from entire subdivisions because of a housing crisis that, in the perception of people or in the memory of people, may happen again. The other thing is we have the Millennial Generation. They're entering the housing market. We've talked about that before, but they're the largest generation and they are looking to buy. Their situations have changed, and so we have all of those buyers that have entered into the market. And as homes enter the market, they're selling very, very quickly, like we talked about the National Association of Realtors saying about 18 days on average across the country. Well, we definitely feel it on the ends, right? The coastal areas feel these impacts a lot more stringently than we do here in the Midwest. But if you have talked to anybody in real estate, if you yourself have looked at anything in real estate, you know that this is the case. But that doesn't mean you can't navigate through it. That doesn't mean that you can't work through it. So my comment to you would be, reach out to a professional like myself and let's have a conversation. Should you take a transition or take a step now, depending on what your end goal are? Should you wait? But are we going to have a market crash? No, that's not what anyone's saying. No one's thinking that's going to happen in the near future. Could something change with the market? Could we become more normal? Could our inventory levels rise and we actually have more homes for these buyers to get into? Yeah, that would be the case. And in fact, if you're a buyer right now, that would be a welcome thing for you. As a seller, though, that doesn't mean that you can't sell for top dollar, and that doesn't mean that home prices aren't going to continue to rise. They just may rise at a more steady rate. Anyways, this is our May 21st market update. If you've got any questions, you know who to reach out to. Hope this message finds you well. Talk to you soon.